Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, it's shaping up to be an interesting week in the markets, you might say. Overnight on Wall Street, the Dow, as we just heard, was off more than 1,000 points at one point, looking at a decline in the 5% range, but in the end, closing higher. That reversal did not happen in Europe, though. Tell us about these big swings and the picture in the global markets right now.
Yes, if you look at the global market, overall trend is extremely volatile. If you look at the U.S. market, as you said, NASDAQ go down by 4.7%, but recovered at the end by going up 0.6%. The volatility obviously was as much as over 5%. And if you look at the fixed index of U.S. S&P 500, it reached 28.94, which is the higher level than 2018 December number. It is lower than the COVID-19 era, but obviously this is one of the record high level of the fixed index. Volatility continues to remain high as the futures market seems to show more than 1% decline right now for U.S. market. So if you look at the global standard, you're looking at Korea as well as Europe and also recently China, all showing a huge volatility, including Japan, mostly moving well above 2% range of volatilities. Why is that happening? Obviously, people are concerned about the risk assets. Main reason for that is because of the central bank tightening. The Fed is expected to outline the policy tightening measures while the rising interest rate, rising inflation environment that we're seeing. So everybody's watching out for the Thursday, the Fed FOMC meeting, whether or not the Fed will be tightening much faster than 4 times a year speed. We think that it will not accelerate that much, but nevertheless, people are quite uncertain about how fast the Fed hike will be happening. And usually when Fed hike happens fast and also quantitative tightening actually happens, then market tends to peak and show a very significant decline trend over the period of more than 1 year time. So everybody's concerned about that. At least a good point is that the earnings numbers are looking at quite positive. If you look at most of the earnings coming out from the S&P 500 companies, most of the numbers are beating the expectation by 76%, and also the sales numbers are beating by 90% of the companies are showing higher than expected numbers. So all in all, we need to look at the fundamentals, but for the time being, the volatility is expected.
Well, that was true today in Korea as well. Both main indices down 2.5% or more. Retail investors are net buying, and the selling is by foreigners. The KOSPI is getting awfully close to 2,700 points now. Tell us about the domestic market.
Yes, if you look at the KOSPI, it continued to fall today. It fell by 2.56%, despite the U.S. recovered. Foreign investors were the big seller of 600 billion won worth of it. Retail investors, the only one buying it. And institutional investors were selling also 120 billion or so. KOSDAQ showed some bottom picking, but still, nevertheless, it went down by 2.8%. Foreigners continue to be the net sellers. Main reason for the KOSDAQ volatility, obviously, it is the high growth sector index. Therefore, people are quite cautious when the interest rate environments are quite uncertain. As we know, FOMC are expected to meet on 26. So therefore, we'll be watching over how that can trigger additional volatility for the time being. Korea continues to be focusing on geopolitical issues and FOMC meetings. All that is resulting into the volatility over major large cap stocks. Even though the fundamentals of Samsung Electronics and SK Hynix are very strong, the futures market of Korea is very large, and that gets affected. And obviously, some of these volatility happen despite the fundamentals. Right now, it seems that the market is focusing on the macro pictures rather than any micro or the fundamental numbers. people will continue to be focusing on what's happening to the COVID-19 cases, what's happening to the interest rate environment, FOMC meetings, and geopolitical issues affecting the oil prices. All that seems to be right now macro-focused way of trading the market, and that seems to be affecting most of the countries, including Korea.
And now cryptocurrencies have been even more volatile than usual this week. Bitcoin falling below $34,000, now back up a little bit, but still roughly half the price it was at last year's high. Bitcoin investors are watching the Fed like everyone else, but what do you see driving the crypto space going forward?
Right. As you said, the Bitcoin actually climbed a bit from the falling below 33,000 to a new low, continuously showing a massive decline from the peak, about 45% to 49% decline from its all-time highs. The cryptocurrency, number one, Bitcoin, is continued to be very volatile. Also, Ethereum also showing quite a bit of volatilities. From the peak to bottom, as I said, it's almost halving the prices. The main reason for this is happening is because obviously right now people are very risk averse, and Bitcoin and the cryptocurrency are the market where the volatility remains because of the liquidity conditions. The interest rate environment affects this most. If you look at the M1 growth rate and M2 growth rate, when Fed tightens, that number should decline quite sharply, and therefore people tend to be not focusing on the cryptocurrency, but rather focusing on gold. Usually when we look at the alternative assets, gold, silver, and cryptocurrency are the major three assets that we look at. Right now, high risk, high volatile cryptocurrencies are not the one that people are interested in, but rather they are focusing on gold purchases, and therefore when the liquidity is dwindling, that means that the interest towards the cryptocurrency will decline while the gold and silver should rise. All in all, we'll be watching keenly what happens to the FOMC meeting, and the level of the tightening speed will affect the cryptocurrency's movement. But at least, though, on the longer term basis, we think the cryptocurrency is something that will be continue to be tradable, and the volatility will be there, but nevertheless, the actual value itself will not be too much further decline from the current level.
Well, finally, Mr. Yu, the Korean economy contracted in 2020 when the pandemic started, like many other economies, but thanks to strong exports and consumer spending, it returned to growth last year. It's likely that per capita income rose as well. Tell us about that and what you take away from the data last quarter.
Yes, the South Korea economy added 1.1% Q-on-Q in the fourth quarter of last year, accelerating from the 0.3% increase in the previous quarter and rising faster than the 0.9% consensus forecast. Private consumption was up 1.7% as expenditures on services, including the restaurants and accommodations and transport, increased. Government consumption also rose by 1.1%. Clearly, this is obviously government-driven in certain cases. And also, we are seeing supplementary budget passing, and therefore we think that the overall GDP numbers should be quite reasonably good going forward. Also, if you look at the export numbers, continues to be very strong, increased by 4.3%. Such as semiconductors, coal, and petroleum products expanded quite nicely. At the same time, import were up about 4.3%. Looking at the fundamental pictures of economic numbers, Korea looks very strong. But nevertheless, right now, the macro numbers are not really affecting much in terms of the share price movement, but rather the U.S. interest rate environment and FOMC concern is making the big headwind, and also what's happening to the oil price, because Korea is highly dependent on energy oil prices, as Korea is one of the largest manufacturing country in the world.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.